All week, even before this week, Dan has been saying that he would steer clear of this IPO. He's joining us now for Friday Pop-In. We had to go back to you, Dan, in terms of how this thing traded and your warnings. And we've heard a lot more from the CEO. How are you feeling about this new issue now?
Yeah, I wouldn't buy this with my worst enemy's money, and that would be Elon Musk. I mean, maybe he's kind of dabbling a little bit if he's a customer of this sort of stuff. When you think about what's going on, and Christina really kind of nailed the whole setup here, the problem is that they continue to actually make these long-term leases for data centers. They continue to raise this capital to buy GPUs. Most of their GPUs are Hopper. They're the last generation, and they're depreciating them at 6 years. These things are going to be useless in about 2 years from now. Then you have the situation of an accounting situation where, if they have to actually depreciate these faster, so they have all this debt, they need to continue to raise debt to grow. They were not able to raise a whole heck of a lot of equity on this deal. And so I think about the situation here, the concentration of the customers. You guys just covered it. Who knows how you can get out of these leases if you're like a Microsoft and you're 62% of their sales. But make no mistake about it, Microsoft, when they're leasing from a company like CoreWeave, this is not their most important sort of workloads that they're doing. And that's why if they have built over capacity for their own data centers, they're going to be the first ones to cancel when they can something from CoreWeave. So again, I think there's going to be many, many iterations of this story that play out. But if you're thinking about ways to invest in the public markets in this generative AI trade, this is the least innovative way to do it. Like if you think about all the other stuff that's going on in the private markets right now, whether it's OpenAI, whether it's Anthropic, whether it's Cohere, these are really innovative companies that are customers of a data center like CoreWeave, and they are ultimately probably going to have more pricing power, especially as you have this kind of ebb and flow of demand and then capacity constraint. Right now, I think there's no real capacity constraint. I think they've overbuilt. I think we're starting to see that right now.
The options will trade on this thing in sometime next week, I presume. Would you be inclined to make a bet to the downside?
All right, here's something really interesting, Mel, and I heard this today from some equity capital markets groups across the street. I don't know any investors who are buying this stock. I did hear from some investors who, if the thing were to pop, they would be looking to get a borrow to short it, right? And so Karen can kind of walk through. She's probably one of those sorts of folks. I don't mean on this deal in particular, because, again, we don't really know the valuation just yet. Here's the one thing I would love to know. When Goldman, JP Morgan, and Morgan Stanley initiate on this name, I'm not going to say I guarantee you anything. I'd be shocked if there's a buy rating. So again, I think you're going to have a lot of hedge funds look to be opportunistic and probably take the other side of this, especially when you see what's going on in the public markets. All the hyperscalers are down at least 20%. NVIDIA's down nearly 30%. Why would you go out and buy this thing?